Hello everyone, this is Juan Sarmiento and today is Friday, June the 9th. Before going to examine our current trades, I wanted to enter a new one on AMAT. So you can see that they reported earnings and they beat expectations by a fairly good margin. This is the first thing you need to do. Let's see, come over here and you can see that just by placing your cursor here, we see that the estimate was 1.8 and the actual was 2. So use your calculator and we say 2 minus 1.8, the difference is 0.2 divided by 2, that's 10%. Okay, 10% is as good as we want it to be. Great. All right. So you can see that the volatility is low. It's a yellow here. And let's do the analysis. First, what kind of a trade can I use? Go to the trade tab. And here I have one, but you can see that I selected July and September. So September is the options we're going to say we're going to select for the back month calls and puts, and that's 98 days to expiration. 90 would be the minimum. So what is the stock price? 136. Yeah, so we can probably do the 35. So click here and say analyze buy, and buy here and say straddle. Okay, we're gonna do 2 of those. And then the front month could be this 35, the July 14th. Same strike price. You can do the 36 incidentally, but because the back month we have 35, let's make sure that they match. So I press the control key and I say buy straddle. And there is my position. I should have said sell. So let's change that to sell. Yeah, there you go. And let's analyze it. Here is my trade. Here it is. Okay, now we see here, these options seem to be a little expensive, but interestingly, I don't think that's real. In the real account, this is in the 34. And so when you average this, well, let's do the calculation here. It's probably more than I was expecting. Let's go to the calculator again. And very simply, you copy here the options down in the bottom right corner of your screen, volatility for each option. 37.52 plus 30.84 divided by 2. We can put it into memory. And then we subtract the front month options. 33 plus 28.4, just an estimate, divided by 2. And subtract from memory, and then recall the memory, 3.48. It's a little high. Okay, it should be 3, but I think that there's an error here on the option, and this option here shouldn't be that high. I think it's an error of the fact that we are in a paper trading account. So be sure to check that. If you're planning to enter this in a real account, make sure that the volatility, the differential is no more than 3%. Then create duplicate order and see that the mid and the natural, the difference, once again, we say 28.55 minus 28 divided by 28.5. Okay. Times 100. And that's definitely less than 3%. So yeah, we could do this trade. And then the last thing we need to do is to make sure that we enter enough of these without exceeding 10% of our account, which will be $9,470. So let's create duplicate order, confirm and send, say multiple so you can check this out. Okay, so we can do 3, 4 is too many, 3 is okay, $8,000. That's definitely less than 9,400, so let's send that off. Okay, while we wait, let's go to our positions here. AXP, this is a option that expired as a leftover. Okay, 180, whatever we have left over, that was a lottery ticket, just sell it now. ISRG, this expires next week. You can tell here that we're very close to even. This is our original price, 39.4, and our credit is, meaning if we were to close that position, we'd sell it for 39.22, difference of $400. Okay, and you can see that we are here at the top of the range, so we don't really need to do much. Earnings are far away. I want to see this go into positive territory here. If we were to close, we end up with $36. Today's losing value, not sure why. 36 is our P&L. We have lost $36 so far because we're so far from the center of our trade here, from our strike price. If it goes down, we don't mind because it can land here in my cone. If it continues higher, we may turn into a profit. $34. Okay, so we can roll over the call and leave the put for next week, or you can leave it alone the way it is. Let's see, take a look at the chart. Do I believe that this stock is going up? The stochastic is pointing down, so let's wait a little for next week. Okay, we'll do that adjustment next week. Let's go to Oracle. Oracle, we have the 105 is our, you can see that I have done rollovers of the calls. You see 60 calls, we have 90 calls. So the calls, the original trade was this 90, okay? And you can tell that I have one outstanding call, August call. And what I mean by that is you subtract your shorts from your longs, and the difference is 1 here, and that's one outstanding call that we could roll up, just like we have done 2 of them already. Let's take a look at the chart, and yeah, it's hitting new highs, and now earnings are coming. So what is going to happen with earnings? The stock may continue to go higher or drop dramatically, so strong move can happen, but also volatility will collapse. The volatility is not too high, but we have to adjust our trade. And perhaps the best way to do that, this put is expiring today. You see that? Okay, so let's first of all roll up my call. Analyze rolling, and we're gonna roll it up to 110 because we're so close to it. Okay, so just the one call. We're gonna roll it up to August 110, and that we take some money off the table. We collect our credit here, and doing that, turn my trade from 100 delta 260, still pretty high deltas, but okay, let's collect that money. There, okay. Now you see that we have these 105s. Well, we can roll those up too. Or we can sell one of them and roll the other one. You know, it depends on, let's say if we analyze rolling, and we're going to 110. Same expiration, that gives us a credit of $3, 2.90. And look at the delta go from 63 to 35. 35 is, I like that, okay? So this is a way to take profits. And we could even sell two of the calls, the 105 calls, and only buy one, so it's as to take some further credits, see? So I'm buying one 110 and selling two 105, and that's a way to take profits. Then we'll end up with two outstanding calls at 110. So we're going to get some money off the table doing that way. So confirm and send. Perfect. Now we have two outstanding calls at 110. Notice the puts. We have 10 long puts and 5 short puts. This is about to expire worthless, the put. Okay, so how about we sell one 5 puts, that is, because 5 plus 5 that we have plus 5 that we're going to sell equals 10, so they're covered by the puts that we have here. So let's add, and what are we going to add? Well, a put that is same strike price, 90. If it's any value whatsoever, 35 July will be fine. We can do this July 7. Let's do the July 7. And 90, that's 16 cents. That's not a whole lot. What about the further out at June? That's 34 cents. So let's click on the bid, put it at 34. I don't know if it's going to fill, but let's put something in between. 29, that's okay. And doing that should increase our deltas. Yeah, I want to do that. Okay, and the calls that expire today, we can roll it over to July as well. Analyze rolling, and we're going to sell the July 14, and that way we get 72 cents. So all the moves that I made are profit-taking moves, and because the expiration is today, the calls that would otherwise be assigned are rolled over. The puts that are expiring worthless will get out of the way, and we're going to sell these puts for a little money as well. Okay, so we wait to see what happens. Let's go to the PANW, Palo Alto Networks. You can see that's the original trade. We can say analyze opposite to see what would I get if I were to sell exactly the same amount. So we are right now at a zero profit, 10 cents P&L. And these are June 30, plenty of time for us to see this work, so I'm not going to change that. Let's go back to the AMAT. It has not worked out so far. Let's go to the monitor tab and wait until these get I'm just going to unlock this, try a higher price. The oracles, let's adjust this to 26, well, somewhere in between. It's not a whole lot I'm getting, so If I don't get and don't get it filled, it's no big deal. And then the call, we can lower it just a bit. And I'm gonna play with this until it gets filled for the rest of the day. Okay? This AMAT should get filled shortly, so I'm gonna just wait. Okay, that just got filled is my put at 26 cents. Not bad. Okay, that's all for today. I will keep on watching these to make sure that they get filled. Otherwise, I will end up with Oracle at $90 a share short. And I don't want that, but if it happens, it's no big deal. Then I have to come back on Monday and adjust the trade by closing the short shares and selling the July 14th. So essentially what I want done is, let's adjust this. If only to make sure that they get rolled over so I don't have to deal with the assigned shorts. Okay, so that's all for today. Thank you very much for joining me and see you next time. Bye-bye.